Hello and welcome to an FX Times daily video recap. I'm CMS Forex market analyst Nick Nassad. Today is Monday, December 21st, 2009. The general theme in today's trading was broader greenback strength. Though here in the euro-dollar pair we see that we traded within the range we had established in Friday's trading. Still, in late New York trading, we saw the greenback gain and test its support around the 1.4270 area. There were no key fundamental releases from the US or even Europe, but equities were higher, and the fact that the dollar firmed despite higher equities was a positive sign for the greenback. This year, when stocks have gained, the US dollar usually would fall, but with the euro being pressured by its own credit concerns and a realization coming around to economists that perhaps the US economy will be the first to show better growth out of the two economies, the greenback is starting to break some of its patterns from earlier in the year. If the dollar is able to keep breaking that correlation between higher stocks and a weaker dollar, then it could mean a bit of a longer term strength for the greenback. If we pull this pair out to look at 4-hour candles, we see that the greenback has come a pretty far way since the beginning of December, when the non-farm payroll release, which happened here, changed expectations around the labor market and increased speculation that the Federal Reserve might begin to raise interest rates faster than expected. We had some other positive releases, including better US retail sales, which coincided with this candle here. And the end of last week, we had the euro being pressured by its credit concerns, mainly from Greece. Still, this move, since it's coming so late in the year and right before the year end, could have a bit of position squaring involved, as traders who were on the long side of this pair for most of the year may be closing their positions in order to book their profits prior to the year's end. So we'll have to see if the greenback strength we see now on interest rate differential speculation continues at the beginning of the new year. The pound-dollar pair slid in today's trading following a test of the 1.6150 area overnight and set a new low at 1.6035. That extended the decline for the pair following the pair's break of the 1.62 level, which happened on last Thursday's trading. We did retest the 1.62-6250 area and then fell back down in Friday's session, and today, after a test of the 50 period moving average here in the hourly time frame, we extended our move below 1.62. This could be an indication that heading into the new year, the greenback will be gaining on the pound, as we had finally broken out of this bit of consolidation that we had in mid-December. We can draw a short-term support trend line if we connect our lows from Thursday and Friday, and you see that that is where we're running up against currently in the close of Monday's global session. In the dollar-yen pair, the greenback rose above the 91 level in today's trading, hitting an intraday high at 91.20. That extends the gains by the greenback we have seen in this pair and moves us past this high that we had in early December that we had tested in Friday's trading, and now we're approaching the highs that we had seen in late October around the 92 area. So we'll see if we test this level before the week's end, or if this rally that we've seen that started around the 87.50 level will need some retracement before we reach this resistance area. The Canadian dollar was one of the few pairs that bucked today's trend for the most part, as it managed to have a pretty sustained gain against the greenback, with the US dollar Canadian dollar pair sliding from 1.07 down to 1.0540 in today's trading. Risk appetite in the form of higher equities and higher oil prices helped the loonie during that span, and we did have a positive retail sales report from Canada come out, but that release came just as this pair had already begun to find some support. We then had a counter rally in which the greenback managed to pair more than 50% of this decline. Zooming this pair out, we see that we're in a bit of an upward sloping channel with support and resistance levels here, though we do remain confined within a broader sideways action with our resistance at 1.0750 and our support near the 1.04 level. So we did have a nice bounce from this support trend line around the 1.0550 area in today's trading. In that retail sales release I mentioned from Canada, sales were up 0.8% in October, a figure that matched expectations, and is the third month in a row that sales were positive. Consumer spending is now is very important to the Canadian economy, as Canadian exports are pressured by a high Canadian dollar. This month, sales were primarily boosted by auto sales, as the core rate, which excludes autos, was up a smaller 0.2%. Auto sales were up 3%, and new car sales were up 3.6%. If consumers are willing to spend on expensive durable goods such as cars, it means that confidence is rising, which is a plus for the Bank of Canada, which has kept its interest rates at a very low 0.25%. Sales, however, have not rebounded to their pace seen 1 year ago, as on the year, sales fell 1.4%. You can see that the retail sales report came out right around here, so it didn't actually help to improve the Canadian dollar, as it already had a very strong move prior to the release. For comparison, let's take a look at the Australian dollar-US dollar pair. Here we see that the Australian dollar fell throughout most of today's session, overnight, and in New York trading, which is different than what we've seen from the Canadian dollar, though both of these tend to trade together, as they are better when the commodities are higher, as both are considered commodity currencies. So that roundup of market highlights should give you the impression that the Greenback was stronger against most of its rivals, though the Canadian dollar did have a relatively good day until it found support. In a look at upcoming releases, we see tonight that Australia posts its leading index for the month of October, while overnight we get trade balance data from Switzerland for the month of November, and the UK posts its current account for the third quarter along with its final version of third quarter GDP. Tomorrow the US posts its final version of third quarter GDP, the Richmond Fed index for December, existing home sales for the month of November, house prices for October, and then that'll be followed up in the late afternoon in New York by New Zealand third quarter GDP figures. And that'll do it for today's video recap. For more news, videos, and analysis, including the technical and video update, please visit our site fxtimes.com. Thanks for watching, and happy trading.